Welcome back to another trade recap where we are going to review this trade I just took. This trade was a bit tricky, but let's just go through it top down. I'm up now 4% on this month. Two trades, 4%. Win rate is pretty good. I'm still getting used to trading how I'm trading right now. But yeah, let's just I do think this month is a little bit or at least this week is a little bit weird because as you can see the daily chart's kind of like we have a lot of gaps in between, so it's kind of hard to figure out what the play is here. Now, looking at the daily chart, I was initially thinking we were going to go down, right? And the reason being we have a C2 closure on the daily chart here. But you know, ES doesn't have a CT closure, so I wasn't really too sure. In terms of the daily chart, I wasn't really 100% sure, so I kind of just went down to the 4 hour. Already had that bearish bias in the back of my mind, but I needed to confirm it on the lower time frames. So on the 4 hour, as usual, we mark at our 1800 candle or in our 600 candle just to see how the daily candle is developing. And as you can see, not much. Again, we can't really tell what's going on the 4 hour. I think, but I did recognize that we were no, because yeah, not much to see on the 4 hour. I was gonna say we have a C2 closure here, but at this point the 6 o'clock candle isn't completely closed, so you can't really tell. So I definitely had to go to the 1 hour for this one. So initially we opened up and we went, actually no, before that, because I think I didn't determine that until I went down to maybe like the 15-minute, right? So I was thinking that we were gonna go up higher because the high of day wasn't set by anything per se. So I was thinking we would go up higher. We actually did open up high, but then if you come down to the 30-minute, so before that on that 1 hour, I didn't really see much again. I think what I did see was that I think we had taken out this low here. So actually no, I think we're in the middle of the range when I came down to the 1 hour. This candle hadn't completely printed yet, right? So again, not much to see on the 1 hour either. So then we just go down lower. I think at this point I just kind of just went down to the 15. Yeah. So the 15, we opened, as you can see, 9:30. So yeah, we weren't yet down here yet. We were in the middle of the range. So I kind of just went forward in time. 9:30 open, we went up. We were holding in this bearish fair value gap here. Let's just adjust this here. And both assets adjusted, went into this fair value gap. So initially I was bearish, right? Because we had, the previous day was bearish. Or at least coming in today, it was bearish, right? Not the previous day. Coming in today, it was bearish. And we had all this low resistance liquidity we could grab. So as soon as this 15-minute candle closed, I wanted to trade this candle down to these lows. Now, if we go to the 1 minute here, right? Let's go to the 1 minute. So as soon as that candle closed, I went down to the 1 minute. And this is, look at the time down here. So 9:45 candle opens here, right? Typically when we want to trade higher and then lower, right? So we opened up, we came low. I need a break of structure or a fair value gap. We got it here. So in a fair value gap. So I would need a retest of this fair value gap and a close through. But unfortunately for us, it kind of just ripped all the way down to the lows and took the liquidity here on both assets. So same thing, look at the time frame down here. 9:45 opens, we trade a little bit higher. We get a we don't get a break of structure here. We get it here. But we don't close through until this, maybe this, actually no, this is our actual first break of structure, right here. We close through it, but we never get a retest, and we kind of just rip towards the target here. So we didn't get an opportunity to get on side. So at this point I was like, okay, are we going to continue lower or are we going to go back to the upside, right? Because we just took the objective, no more reason to go lower. Are we going to flip? Now, at this point, once we took this, I went back to the 1 hour because we were coming into that 10 o'clock candle, and I was like, okay, well, if we're going to trade back higher, I want to see maybe a model to the upside. lo and behold, we did get one. As you can see, we have an SMT here. SMT at the lows here, pushing us up to the upside. So at this point, I was like, okay, cool. I'm going to trade this. Now, I decided to trade this on ES. Why did I just try to trade this on ES? Because ES was the one that didn't take this low, right? So it was a little bit ahead, so I was like, okay, cool. So I went down to the 50-minute. So I didn't mark out anything down here, like a candle per se, because I could have marked out, because realistically speaking, I would have had to mark out this candle and then trade the opposing candle, right? So like this candle, I would have to mark out this candle and trade this. But because we just opened on 10, and this model was already forming, I just went to the 1 minute. I just went straight to the 1 minute, and I kind of just followed the 10 o'clock candle by candle. So I basically was just like, okay, 10 o'clock's candle opens here. So this was another reason why I believe we were going higher, because I was looking for 10 o'clock to open high and then low, right, initially. But we were opening low and then high. So that is a signature that we're going to go higher. Now, okay, if we're going to go higher, what do I need to see to take a trade? I need to see a break of structure of some sort. That means I need to take, that means this is a break of structure, this is a break of structure, this is a break of structure here. So we got that here. This was our first break of structure. And then we went higher. And then we created our first order block. This would be our continuation confluence. We closed above it here. So I entered here and then took it to 2R. So this 10 o'clock candle was an expansion candle, basically. So if we go back to the 1 hour, we can see that this candle expanded. And I was able to hit TP right before 11 o'clock. So yeah, that was a really cool play there. Took it from range low back into internal range liquidity. And yeah, played it really nice. SMT at the lows here. Yeah, so I traded the 10 o'clock candle. So that was really nice. I feel like this might have been a little bit confusing for you guys. I'm trading with a little bit more precision than I was before. Now, if you wanted to frame this in a 3-minute manner, I find that you can definitely frame this in a 3-minute manner. I just think it's a little bit harder in terms of precision. But anyways, we open load, we came up higher. Our first break of structure would be this closure here, but we need a continuation confluence. As you can see, it's very hard to see a continuation confluence here on the 3-minute, right? This is our break of structure right here. But in terms of continuation conflicts, you can't really see anything here. Like, not on the 3-minute anyways. Let's see if we can see something on the 2-minute. So our first break of structure would be here. Okay, yeah, if you use a 2-minute, you can see it. So we get our first break of structure here. Then we get our continuation. The only issue, once again, is that if we need a close over of this candle, right? So it would have been a little bit too late. Maybe you could have caught the retracement back into this fair value gap. But again, you would have had to enter maybe after this closure above. So 1 minute just gives me a level of precision, the best level of precision, in fact, that the 3 and 2 minutes sometimes does not offer. You can see the break of structure here, and you can see the continuation confluence, but you would have had to enter here, basically, right? And that's really too, at this point the move is kind of over, because you don't know, because we're coming up on that 11 o'clock candle now. So as you can see, we come back in here, maybe we'll continue. Okay, so I guess you could have entered here. Again, really tight entry, still wouldn't have got your 2 to 2, your 1 to 2 either way. But it comes back in, respects this order block, and continues higher. But as you can see, the 1 minute does give you the best level of precision here. But yeah, I feel a lot more comfortable trading the 1 minute in this manner. I can trade any time frame, like 2 minute, 3 minute. I can use anything, but the 1 minute does give me a level of precision here. And sometimes the 3 minute is fine too. I just think it's harder sometimes to get onside with the trade in terms of looking for those continuation confluences and things of that sort. Now, if you wanted to do the 5 minute, I probably shouldn't have erased everything, right? But let's just once again look at this 10 o'clock. Yeah, actually the 5 minute framework would have been fine, because we have our we have our breakup structure here. We come back and respect this fair value gap. But again, we would have had to, maybe our earliest entry would have been here, unless we entered around, let's see, maybe we have like a entry here waiting for the retracement, and we could have targeted 1 to 2 here. So yeah, that would have panned out if you waited for the 5 retracement. But if you had entered here, let's say you'd entered after this retest, after this break of this, you would have, let's say I probably would have realistically had my stop here. I would have been stopped out. So the best thing would have been to wait for this retest and then trade 1 to 2 right there. So 5 minute could have worked out as well. I think in terms of framework, 5 and 1 minute are the best for this. 3 minute can work as well. It's just, I think it's a little bit harder to see what's going on here. But 5 I think is the best framework, and then the 1 was the best framework. Yep, basically. If you have any questions, leave them down below. Don't forget to like and subscribe, and I'll see you in the next one. Peace.